Hi everyone, welcome to Weekly Market Insights for the second week of May 2024. I am your RV Raju Angadi Vishwanath, a SEBi registered research analyst. Come, let's have a sneak into the how all the indices fared and what would be the probable trends for the Nifty, Bank Nifty, Sensex, and how to plan your trades and which are the stocks we could select and how the commodities are faring in these markets. Let's have a sneak and a detailed view into how to plan your trades and establish your trade setups for the second week of May from 6th May to 10th May, starting with the recap. Nifty gained 0.25%, forming a shooting star on weekly candles. Again, Bank Nifty, Fin Nifty outperformed. Still, we are off. We were off the highs almost. We touched 50,000 levels in the Bank Nifty, closing around below 49,000. So 1.5% gains were seen in the Bank Nifty. Fin Nifty 2% gains. PSU Bank Index also gained. PSUs 3.9 for almost 4% gains. Media clearly underperformed with IT with the 3 to 2%, while energy and auto had a modest gains of 1.5 to 2%. Rest of the indices, mid cap Nifty gained 1.17%, mildly positive to flattish. So, warning bell is seen in certain indices in the market. So be cautious. Now the volatility index also has risen. The markets are going to set in volatile kind of a moves in these kind of a markets. Like in a Friday session, we are seeing a very strong reversal in the Nifty. The strong reversal in the Nifty is seen with the retracement of last three candles and close below that. So multiple times we have rejected the levels of 22,780 to 22,800 levels, and a bearish belt hold or engulfing pattern is formed on a daily chart. A shooting star rejecting from the again a band high. The rejection of the upper band is seen, and now on the weekly charts 22 250 to 280 to 200 levels. Once it breaks, we are heading towards lower levels. So 22 200, the previous weeks couple of weeks candle low as well as the middle band is the level to watch out. So Nifty clearly shooting star on a weekly, while on a daily we are seeing a bearish engulfing. We'll get into the more of the Elliott wave forms in detail going ahead. Shooting star again on a Bank Nifty and a bearish engulfing on a daily. Fin Nifty also similar kind of a pattern, but a clear view could be taken only below 21,650 levels, which was an important resistance zone previously. Mid cap Nifty, well, there might be some steam may be left in the form of a formation of an ending diagonal on a daily charts, although shooting star is seen in the weekly chart. So how it takes, we need to either consider it as an irregular flat. If we are in a corrective zone, irregular flat towards 9,800 levels or 9,600 levels can be seen if the rejection point of 11,200 is to be expected. Else, if we are forming an ending diagonal in the mid cap, if in case scenario we are forming an ending diagonal in the mid cap, then 10,880 to 830 holds to be the very important support. There can be a bounce. So I'm going to get into more detail going ahead. Let's see the first of all trends. So major indices 21,650, shooting star in the Sensex is well bearish engulfing in the daily and shooting star in the weekly charts. Small cap index, a small candle, kind of a hanging man, and a bearish engulfing is seen. So Small cap can be at danger as it looks to be on the completion of the upper band. IT clearly continuation of a bear grip is happening. If some FMCG is choppy, not clear unless it takes out 55,000 levels. So we are avoiding the sector. As of now, there is no clear trend. Infra, again a shooting star near the high of the Bollinger Band, and a sharp reversal is seen with the bearish engulfing on a daily charts. Energy index, well, looks likely a impulse may have completed. A shooting star on a weekly is seen. Auto, kind of a shooting star on a weekly and a bearish engulfing on the daily. Friday's low holds to be the key. Friday's low 22,300 broken. Then we start the downward journey for the automobile index. PSU banks, well, there could be some scheme left in the index. 7,380 holds to be the important support. 7,700 crosses, which to be good. Shooting star though is clearly seen. Need to be on a high. Reality index. Not clear with the trend, we would avoid as of now. Media looks to be bearish to sideways. Once we break the levels of 1800, 1780, we are going to head lower. Pharma may have entered a sideways band, but once we take off 19,200 300 zones, Pharma can outperform going ahead. Metals need to watch out. Can be some kind of a spinning top on a weekly chart, so we are on a wait and watch list on the index. While PSE index could be in the form of a ending diagonal. Maybe we could have completed the C wave and the D wave down could come a small down wave, kind of a mid cap, kind of a pattern only, but weekly still holds to be bullish for the PSE index. So that's a broader view on all the indices. Now the trends we have just had a gaze through. Let us get into the depth of the analysis of the Nifty, Bank Nifty, and how to establish the trade setups. We have seen a clear bear grip in the Nifty. On a daily chart, a bearish engulfing on Friday's candle is formed. 22,300 to 200 becomes an important support for the Nifty now. If it is a ending diagonal for the ABCDE, now we can head towards 20,700 odd levels in the 21,200 to 20,700 levels or 20,250 levels can be revisited in the Nifty. So there can be a sharp reversal in the markets after some more consolidation of a week may happen. The result seasons are out of the way. But what are the wave counts saying? Let us have a sneak into the Elliott wave counts of the Nifty. We are seeing a clear 5-wave decline here in the Nifty. What would be the strategy? As of now, the rejection has happened. So simple strategy for Nifty would be to sell on rises. What are the levels to watch out? 22,534 short-term level for Monday. 22,570 to 595 would be the ideal selling point for Monday for the Nifty. For the next week, again 22,570 to 595 would be the resistance zone. 22,634 and 22,700 would be the resistance until 22,720, 730 level crosses. we are not out of the woods. Markets are looking to sell off on all rises. So basically, immediate sell can be 22 570 to 595 would be the ideal selling opportunity with 22 640 as a stop loss for targets of basically 22 400. Once 22 390 is broken, we are heading lower in the markets. 22,390 below, the markets can head towards 22,300 and 22,200. So that is the basic scenario for the Nifty. How to plan your strategy and the trade. So basically Nifty is looking quite bearish. The impulse decline is what we are seeing 1, 2, 3, 4, 5. The decline what we are seeing. So what could be the scenario? I'm going to tell you, like, now this is what has happened. This could be the next scenario, like, so the 5 wave decline is seen here clearly, and now the bounce could be in the form of ABC. How the pattern pans out, that also needs to be analyzed. Either it would be a ABC, or can we see a time consolidation in the form of triangle is needs to be seen to catch up with the time. So these are the two scenarios which could be the possible scenarios in the markets which could happen. A formation of a triangle, then a crash in the next wave could be likely because of a time and the election scenarios which could trigger the markets. But 7th could be the reversal day. Tuesday could be the reversal day, as we are seeing a full moon cycle. The Amavasya is going to be on cards. No moon. In fact, it's a no moon cycle. It's Amavasya. So that could be the one reversal trigger. 22,006, 570 to 640 would be the ideal selling point for the Nifty. So we have explained the Nifty levels 22,300 and 22,200 becomes a support as per the data also. Below that, 22 to 25 below 21,975 levels can be seen. The data hints 22, 500, 600 and 700 call rating is clearly seen in the markets. While coming to the Bank Nifty again reversed almost near the 50K levels. Now we have broken the trend line, the upward sloping trend line from where the trend has started, 46,800 zones from where the trend has started in the markets, that has been broken down in a clear and concise way. So the trend line has been broken. Now the levels for the Bank Nifty to watch out. First, I'll explain the levels, then I'll give the Elliott wave counts and the trend and how to establish your trades and the strategies. 49,120 to 140, 49,242 and 49,377 are the important levels to watch out. So 49,250 basically holds to be the key resistance zone, 250 to 270. Above that 49,400 would be the resistance. Until 49,600, 650 is not crossed, we are not out of the woods in the Bank Nifty. First confirmation 49,250 to 270. Second confirmation 49,600. And once we break below the levels of 48,600, 48,000 and 47,700 levels can clearly be seen in the Bank Nifty. At least as of now, the trend seems to be even wave counts wise. What we are seeing, A, B, C, if the correction is to be over, or else 1 2 has happened. The wave 3 could have been started, and we can reject from 49,000 to 49,200 levels in the next couple of days and start falling below 48,800 and 48,600. We are going to see the clear confirmation of downward trend to resume in a faster way in the banks. Until then, there will be a range of 48,600 to 49,600. So watch out the levels objectively. Even the wave points in a similar way. If the correction has to be over, ABC would have been completed, and 49,250 to 300 crosses 49,600 is the next hurdle. Then we are going to evaluate the markets accordingly. That's the strategy for the Bank Nifty to trade for the week. What about the Fin Nifty? Well, Fin Nifty looks to be weaker compared to even Bank Nifty, the note. And once we break below 21,740, the 21,600 holds to be the important support. 21,740 below 21,600 holds to be the support. Now 21,900 and 22,000. 21,900, 21,970, and 22,100 holds to be the key. Any close above 22,100, trend on the upside is going to resume for the Fin Nifty. While 21,600 and 370 are the longer term supports, 21,600 and 21,370 or 200 levels is taken out, then the Fin Nifty is for a toss, and we are heading towards at least the levels of 20,000 or 19,800 in the Fin Nifty. So 21,300 to 360 and 21,600 major supports. 21,960 and 22,100 major resistance zones for the Fin Nifty. The band is been explained. The mid cap Nifty, if the rejection happens and it's a irregular flat in the ABC 1 2 3 4 5 scenario, the decline would come to 9,800 levels in the mid cap, and the rejection point of 11,200 to 250 is a major resistance for the mid cap Nifty, while on the downside 11,000 below 10,914, 10,980, 10,920 to 10,880 is the important support. 10,830 below downtrend would resume for the mid cap Nifty. That's the view on the mid cap Nifty. Nifty, while Sensex is similar to the Nifty, how to establish the trades? In both the case scenarios, Monday being a mid cap Nifty expiry, before getting into the Sensex, mid cap Nifty in the next week can test 10,920 to 880 levels, even though if we have to go up in the final leg of an ending diagonal, which can be completed in the wave 5 in the mid cap. While coming to the Sensex is similar to the Nifty, but still 73,500 to 400 breaks. The first confirmation of the Sensex would come in, and 71,800 to 700 below, Sensex could crash towards 70,000. Well, the rises of 74,000, 150, 74,470 would be the resistance, while 74,700 would be the stop loss for the Sensex. Unless 74,700 or 750 levels is not taken out, Sensex is clearly a sell on rises for at least 72,500 as the initial targets and 71,700 as the positional targets, and 70,000 or 69,800 levels can be revisited in the Sensex going ahead. So basically that sounds to be a healthy correction is on the cards. So some 4 to 5% correction could be on the cards for the Sensex. Rises would be sold clearly. Same impulse decline is seen in the Sensex, is what we see as per the chart. So basically that's on the index analysis. Now we'll get into the stocks of the week. Before getting into the stocks of the week, if you like our video, do subscribe to our YouTube channel Traderz Hut. Do follow us on the Twitter handle and the Facebook handle for the regular updates on the markets on Traderz Hut. If you'd like to join our free Telegram community, click on the link below and join our Telegram channel. Also, if you'd like to avail our services like live trading room or advisory, or if you'd like to establish the option trading and become an expert trader, option data workshop is there. Below are the details and the contact details and the link below. You can get in touch with us for the more queries and the details. That's it. Now we'll get into the stocks of the week. McDowell's is looking very good on a positive breakout until 1170 holds. McDowell looks good on the charts. So watch out on a conditional buy with the 1170 below as a stop loss by McDowell's. L&T similarly is looking weak on the charts on a break below 3,470. L&T looks weak, at least for 3,270. A 200-point down move can be 3,470 to 270 looks to be the important point on the downside, while 3,570 becomes a resistance, 570 to 600 becomes a resistance for the L&T. IDFC, well, IDFC Limited is a tricky scenario. The impulse advance with 119 below 107, 1770 and 1450 becomes an important support. 1450 below, we are clearly out of the woods and the stock can crash, while 117.70 the gap zone, if it holds and we start inching here above 123.50 or 124, IDFC can confirm the start of the wave 3 of 5. So stock can hit the fresh highs towards 140.45. Results on the 7th May. Watch out the stock. Reliance in a range. What to do? If the flag confirms 2,800 to 3,020. 2,800 to 300, 3,000 is a band, plus or minus 30 points or 20 points can give as a buffer. So watch out the stock. If we hold the lower end of the band, then buy the stock for 3,000 again back. So next stock is Adani Ports, looking weak. Well, the stock breaks below the zone of 1,300. Stock is headed back towards 1180 zones, 1180 to 1190 zones. So watch out the stock. ITC on a conditional basis, we are in a 428 to 442 range. 428 taken out on the downside, 429 to 28 taken out on the downside. It looks weak for 409, while 442 is taken out. At least we are heading towards 460, 62 levels on the ITC. So watch out a clear trend to emerge. And one more momentum stock is Coal India. Looking good on the charts. The momentum is on the upside. The trigger until 460 to 458, 462 and 458 holds. The stock could hit 500 plus zones. So that's it on the weekly insights. Disclaimer in the sense, what I like to add is stock market investments are subject to market risk. Read the related documents carefully before trading or investing. This video is for educational purpose. I am Mr. Raju Angadi Vishwanath, a SEBi registered research analyst and a trader myself. I do hold some of the short-term positions in options and the indices. Please do consult your financial advisor before investing or trading in the markets. as trading in derivatives is associated with the significant risk. Have a happy and prosperous trading week ahead. See you all next week again. Signing off for now, your RV.